future, and its name is Marco.
Welcome back, everybody, to Hoot Loot, a Hoot Entertainment production. Today is the last day of May 31, 2022. We have an incredible show for you today. A place you come here to be informed, be amused, but never be misled. Welcome to the Fact Zone. Same fact time, same fact channel. Today's show is going to be an extension of last week's show and a show we did before called Wall Street Greed Makes Investors Bleed. This will be part 2. We're not going to make a lot of friends here today. We're going to lay it on the line, and a lot of people aren't going to like it. As a matter of fact, they already don't. So with that said, we'll be back with the charts in a minute. All right. Well, the chart you see in front of you right now is not exactly the typical chart, but it's insider trading by Congress, especially one Nancy or Fancy Nancy Pelosi. It seems that Miss Pelosi has made hundreds of millions of dollars illegally by insider trading, something that Martha Stewart was arrested for, something that many people have been arrested for, but not something that Congress ever gets arrested for because they own us. We don't own them. But remember, they work for us. We don't work for them. Vote out the incumbents. Make America laugh again. This is one reason why. They do things that are illegal. You ever wondered why they spend $50 million for a Senate campaign race when they're only making $200,000? Because they're skimming in a rigged casino. That's why. This is a nonpartisan chart. 18 or 19 Republicans, 18 or 19 Democrats, all milking the system from a study that was done, of 105 trades. And Nancy Pelosi is the trader of the year. She knows how to time everything perfectly. So well so that there is now a secret following on Robinhood, of all places, of Nancy's trades as soon as they can get them. People are following her trades because they know it's insider information. And she refuses to believe that there's anything unethical about it. It's illegal, okay? It's freaking illegal. This is almost like a palace coup. The rules don't apply to those in power, so we got to throw them the hell out. All right? Now, who's with me? Yeah, all right. Now, let's go on. All right, so we're going to go to the canaries in a coal mine. And what is the biggest canary of all? This one. Formerly, it's now called the password formerly known as Bitcoin. The reason why I know it's a password is because no password, no Bitcoin. Password, Bitcoin. Therefore, it has to be a password because without a password, you can't get your money. So password equals Bitcoin. Bitcoin equals password. It's as simple as that. And if Frankie Valli were doing a musical, it'd be Bitcoin's a password, a password, a password, a password. But he won't do that. Not for me anyway. But in any event, Bitcoin is in a bear flag, and I believe that we'll see another leg down at some point. It doesn't look like the market, is prepared to rally yet, and we're going to talk about that more today. All right, so let's go to the next canary, and this is interesting. I've overlaid ARK, Kathy Knock on Wood's fund, with IPO, which is a passive initial public offerings fund. Look at that; they mirror each other perfectly. And, her claim is that she's a great stock picker. Well, IPO has no stock pickers. It's basically a monkey throwing a dart at the wall, okay? As long as it's an IPO, it goes in there. So, Kathy, or Ms. Knock on Wood, I apologize for that. I didn't mean to be, so crass. But, no, that claim is false, all right? Sorry, this is the Fact Zone. We do not deal in innuendos other than the Italian suppositories in the closet, all right? Now, this is another canary in the coal mine. Now, this is MicroStrategy. This is Michael Neuentown Saylor's company. And as you can see, this thing has not correlated with Bitcoin very much. And Saylor has come out in the last week and said he thinks that Bitcoin will be, or the password I should say, will be worth millions of dollars per coin. Now, why don't we kind of do the math here, Mr. Neuentown Saylor? $1 million a coin, if it's that, the lower end of your range, and 22 million coins, that's $22 quadrillion in market cap. That is ridiculous, all right? Neuentown Saylor, you would have, at that price, you would have something like $1 trillion. It's not going to happen, dude, because if it does, your hamburgers are going to be probably $500,000 a piece, okay? In that scenario, maybe you get to that price for Bitcoin. I don't know. But not in any scenario I can tell. And this thing right here, this company right here, look at that. It has barely tracked Bitcoin, even though Saylor says he'll never sell it, but he's going to have to. He has 2 tranches of debt due that are about $1 billion each in the next couple of years. I don't know how he's going to pay for those bullets, but he's going to find a way. And I just don't know. I think I think Bitcoin is going to cause him some heartache, and maybe more. We'll see. Tesla is another canary. What can you say? Elon Musk, 24/7. I don't even want to talk about him today, but I do want to say this. We are now having grid problems, electricity problems, energy problems, you name it. Okay, he's got a supply chain issue, lithium shortages for batteries. He's got a lot of competition. He had a 60% market share. It's going to drop. So, Tesla is not Tesla's going to have to win a very crowded field here, and not that profitable of a field either. A lot of the companies that are just, starting out, they're not making any money. They're barely getting their first production cars out. But they have a backlog of orders. And so, Elon, the felon, take care of yourself. And I know everybody's out to get you. I'm not out to get you, but George Soros is, and someone with the Russian army is, and you are the most victimized multi-billionaire I've ever seen in my life. Okay, let's go on. All right. The Dow Jones Industrial Average, again, we have a rounded top, and we have a target of 28,000 on the downside. The target is computed as the top of the dome to the horizontal line. That's a difference. That's 4,500. Take away that from the horizontal line itself, you get 28,000. Now, this is interesting because the Dow is the best performing of all the major indexes. And there's a reason for it. We're going to show you in just a minute why the Dow is performing so well. It's not really down very much. Everything else is getting slaughtered, not this. And we'll show you why. All right. So the NASDAQ 100, we have a target here also of 9,500. I believe that today probably marked or close to the end of the bounce that we've been experiencing. These kind of bear market bounces are very short and sharp, and they die quickly. It's my guess that we're going to see all the major indexes start curling over and going down. We'll see. S&P 500 also below its rounded top and rallied up to the bottom of the rounded top, which is very expected. We still see a target about 3,600 for this, and maybe lower. I don't know yet. Small caps, bear flag. They're definitely in a big downtrend. There's 2,000. Actually, this is the S&P Small Cap 600. So there's 600 stocks here worth less than Apple. Okay, but a lot of little biotech companies and a lot of little companies that are going to be hopefully big companies someday, or at least they hope. And the Dow Jones Transportation Average. Well, you got to ship goods, right? Well, this thing is just hanging on for dear life. Whether it's shipping or airlines or truckers, they're all having problems. You can't get anything from here to there unless you use a hamburger taxi like DoorDash. If you want to get your McDonald's Big Mac taxi to your house, that's about it. All right. Now I want to explain this chart for a minute and spend some time. The question of are we close to a bottom is answered right in this chart, though it may look confusing. Okay, this is the volatility index, or VIX, V-I-X, versus the S&P 500. Now, the VIX has had 2 spikes to 85. They mark the bottoms of 2009 and 2020. Perfectly. Now, most bottoms are marked by big spikes in the VIX, or panic. I mean, basically when the VIX goes up, there is more fear, there is more panic. So it's kind of a insurance premium, if you will. The more insurance you pay, the more scared you are. So people are not scared enough. That's the problem right now. Even though the market has come down like a rock, there's too much complacency. The polls, the investor sentiment polls say one thing. We're all bearish, but the action says another. They're not. And, come to think of it, ARK has been having inflows. Believe it or not, ARK is having inflows. So people continue to buy the story. People continue to want stupid stocks. People continue to be stupid, and they're going to learn why not in a minute. So anyway, the VIX is down to like 25. That is not anywhere close to what you'd see at a bottom, any kind of bottom at all. And you would at least see 50, 60, something like that. It's very rare, but that's what you need after a big washout. And so every time the market has a bear market rally like it had the last couple days, this tends to flatten the VIX and make the fear go away. Well, if you want the market to bottom, you need a lot of panic and fear, and it's not pleasant, but that's what you need. And this chart shows you that there's not enough panic here, and that we're going to have to grind lower for a little while until people start to panic. All right, the password formerly known as Bitcoin, 5 years weekly. It's broken down out of basically a large, massive bear flag, and next support 20,000, and after that, I don't know. This thing, I think Bitcoin could, end up. Prior bubbles of Bitcoin have been an 85 to 95% drawdown. It could be like that this time. Or maybe people will wake up and find out it's a password, and it will go to zero. Bitcoin's a password, a password, a password, a password. Keep that in mind. Ethereum. Now, this is the great hope. But Ethereum, too. This is the Ethereum plotted versus Bitcoin. Okay, so what you find is the highest correlations to the password formerly known as Bitcoin are the altcoins and Ethereum. They all have 95% type correlations. Everything else is under 80. There is nothing as close as the altcoins. And the reason why is because they trade in pairs. So when Litecoin goes up, Bitcoin goes up, they're all trading in pairs. And they're trading against each other. And they're just trading and churning and generating fees. And that's all they do on Wall Street. That's all they do. Generate fees. You can go be screwed. And so Ethereum is a critical support. I don't think it's going to hold it. I really don't think it's going to hold it. And this thing is going to find a lower level. It is a real business. I can't say that it's nothing or a password. It's a real business. But I don't know what its value is. It does have real customers. It does have real clients. There are some real people there. But I just don't know. I think it's still got a long ways to go down because they can print 18 million tokens a year. That does not make it scarce one bit. All right, so right now, what we're showing you on the screen is about the commission business, okay? Now, the commission, we talked about this last week, but this is all fee-driven, okay? There's churning and trading all over the place. This is from Bitfinex. And what you can see is the volume of Tether and Bitcoin and Ether, and that Ethereum is traded in tethers and dollars, Litecoin in tethers and dollars, and every time on the fee structure you swap between a tether and a dollar, which supposedly they're equivalent, you get charged a fee. So, the rule that they have is that you got to trade in cryptocurrency. You can't trade in bucks. So they force you to buy the stable coin. Force you. If you want to play with us, you got to buy our stable coin. And that's what they said when Luna went down. Oh well, $40 billion lost overnight. Crypto's the future. I know. The future is you're going to be broke. All right. Ethereum, critical support. We're going to see what happens, but I have a feeling this thing is going to take another leg down. All right. So now, these are some of the funds that have wrapped themselves around the password. Okay. So this is called Bitwise or Pound Foolish versus the password formerly known as Bitcoin. Now, notice that Bitcoin's in the solid black line, and Bitwise is the chart. Look at the underperformance. Huge. Why? Fees, fees, fees. Fees for coming in, fees for going out, fees for swapping into stable coins, fees for just having a coffee and lounging around. Fees, fees, fees. That's what it's all about on Wall Street, generating fees. And in fact, if you understand that the commission structure that I referred to earlier, at Bitfinex, it's really pretty amazing. They also have a multi-level marketing program called the affiliate program. So you can lose your shirt, but scam your friends and make it all up. I guess that's a working theory. Scam your friends, lose your shirt. They don't care, and you get 3 layers down in multi-level marketing. What a racket, and it's all offshore. You're not protected, not one bit. If these things go down, good luck. Try to find somebody that gives a crap. All right. Grayscale is the good old Winklevi brothers, or the Winklevi, Revenge of the Winklevi. This is Grayscale password trust versus the password 5 years, and look at that underperformance. I mean, in the 5 years, Grayscale has gone down, and Bitcoin, or the password formerly known as Bitcoin, has gone up. So, there's a big, huge gap in performance here. I have a feeling that somebody's gone to the bank here. Again, it's all about fees. Grayscale is coming out with more funds, more funds, more funds. And you can put them in your IRA. How cool is that? You can lose your retirement money, but at least it was in cryptos because that's so damn cool. All right, let's go. All right, this is the Grayscale large cap fund versus the password. Okay, notice there's no resemblance to one versus the other here. I have no idea what they invested in, but just look at this. It's got to be fees. It's got to be something because the money just doesn't just vanish into thin air. It's got to go somewhere, right? Maybe the manager's pockets, maybe more fees, maybe more commissions. You never know. I think we need an audit of that. That's for damn sure.
Yes!
Okay, this is an amazing one right here. This one is called SARC, and it's basically short ARC. Okay, it's all about the trading. Isn't that what I said? So now you can go short wood, short knock on wood with SARC. And the interesting thing is SARC had outflows over the last week, okay, while ARC had inflows. So people are bottom fishing out there, and even a short ARC fund is not even getting any inflows. But leave it up to Wall Street to generate fees. Here you go, SARC. Okay, this is, we're kind of getting into the stupid stock section, okay, of this today's show. This is the timeline of a stupid stock called Beyond Meat. Beyond Meat was supposed to be the meat-free meat that was made out of 27 chemicals or something like that. I don't even know. Couldn't even count them on my 3 hands or whatever I have. But it opened up it had an IPO price of 25, opened up the first date at 70. So you would have made 3 times your money overnight. It then continued on up to about 200. That's when it was the peak of its coolness. Yeah! But then it kind of fell down, and now it's gone all the way underneath its IPO price, meaning that everybody is down in Beyond Meat. All right. Now, this is also another one that this is called, it's actually called Peloton. I call it Peloton because it's done exactly that. It's fallen a ton. It's also below its IPO price. They make stationary bicycles that you can interact with and not go to the gym. And you think that you have a screen or something, and there's like some kind of gym instructor there, telling you to pedal faster, up a hill, down a hill, whatever. Well, anyway, suffice it to say, they didn't do very well, and this thing is also below its IPO price. Roku is actually, it's not totally a stupid stock, but it was a stupid stock. Now that it's fallen 80%, it is a real business. It's getting less stupid all the time. Part of being a stupid stock is overvaluation. Okay, it doesn't mean that the concept is stupid, though it can be, and it often is. But what it does mean is that the valuations relative to the concept are ridiculous. That's what makes a stupid stock. It's all hope, it's all fluff, but it's really nothing in between. All right, Roku is probably the biggest stupid stock in the ARK portfolio there is. But like I said, it's not as stupid as it used to be, and it's way down there. So, maybe this thing will at some point settle down. I don't know. We'll see. We'll have to see. The stupid stocks are still going down. Okay, shop till you drop a 5 years. This stock was $1,700, and it still has a market cap, and it's fallen to now $375. It still has a market cap of $50 billion. That's a lot of value this thing can bleed off. It's barely profitable. So shop till you drop a 5, and it did drop a 5 quite a bit. Okay. Snapchat is probably one of the stocks of the week. It's in social media, and they took a real big dive. I don't even know why anybody uses this stupid app. But the thing is, this thing got slaughtered. Okay, it had a target of $12 after we did our little rule of thumb thing. We took the top of the dome to the horizontal line and then subtracted it from the horizontal line. Came up with 12. The thing actually fell to 10. Now, again, this is in hindsight. So, again, it's just an illustration. I never predicted this, but it's an illustration just to show you that these rules of thumb sometimes can be valuable. Teladoc Health, well, this one's not so healthy either. $5 billion market cap, a subscription-based medical service. not doing so well, down 90%. And ARC doubled down and doubled down and doubled down on this. Not good for their health either. Let's see. Okay, Uber. Who couldn't not like Uber? You know, market cap's still $50 billion. It's still losing money. And this is basically a hamburger taxi, and it also transports people. But it's below its IPO price now, and it's sinking lower. And who knows if this company is going to have to merge with Lyft or fail or what, or some other company is going to come and replace it on the scene. Okay, Upstart Holdings, too many loans. Why do I say that? Because Upstart is a new fintech company. What they do is they have an algorithm for your credit score. So they lend you money. And then they hope that they have a superior credit score, and they can then package it and sell it to the banks. So what ended up happening is they bought a bunch of loans, and no bank would buy them. Okay? There goes your algorithm. You know, the problem is with the algorithm is the banks don't know anything about it. They have no history, so they can't evaluate the loans. So Upstart ended up holding all these loans, and it's choking to death on its own loans. So Upstart Holdings do many loans, and it just got its butt kicked. But it's actually not a bad idea if it should work. You know, it's like basically an arbitrage between a FICO score and their method of calculating your own credit score. So we'll see how this works. There's a possibility here. We'll see. All right, U.S. dollar index. All right, this thing's gone screaming, and it's bounced down a little bit. It's now made a triple top at about 103. And it's starting to come down, but well above its trend line, still looking healthy. This looks like a flight to safety. I've said it before, say it again. The dollar index is going up for all kinds of weird reasons. I think a flight to safety is probably the best one. Okay, the CRB Index is a basket of commodities. It broke out today. It's surging to a new high. All the talk about inflation tapering off, I'd forget about it. I wouldn't want to deal with it. No. Unfortunately, producer prices are going to take off, and we're going to show you some of the things that are causing this to go. This is another issue called the Goldman Sachs Commodity Index Trust. You know, look at that one. It's also broken out. Resurgence of inflation is indicated, and that means that the Fed either has to slam on the brakes, or we're going to have lower profit margins, or nothing good. I can tell you that. Okay, the Invesco Agriculture Fund. Now, this looks like an exhaustive move. Now, everybody and his brother knows that there's going to be a global food shortage. What's new? What's new? Everybody knows about it, so they bid this thing up like crazy. It's possible that this thing was more than took into account the global shortage of food that's expected. I don't know, but this kind of pattern says exhaustion, and people chasing after food stocks. All right, corn forming a bull flag, still in a healthy uptrend. Corn is everywhere. Soybeans also breaking out, but then they came back down today. I don't know. I mean, right now things are breaking out, breaking back, breaking out. It's really confusing. That's why I think you should be in cash, sit on your laurels and have a good time and drink a beer or something like that, because this is no market for you to be gambling in at all, I think. All right, sugar. And I'm not going to sing the song today. I'm just going to say that this thing looks sweet, and it's going the hell up. All right? Sugar is on its way. Wheat. I'm looking for a bullish breakout here. It's in a big ascending triangle. Who knows what kind of wheat shortage there's going to be. Reports are that there's something like 6 weeks of wheat left in the world in stocks and storage. I don't know if it's true, but I do know if it is, we got a problem, Houston. We got a real problem. All right, crude oil. This also had a huge move up today, and the OPEC reportedly wants to either exclude Russia or put on some kind of price controls or something that made crude jump like crazy. But also the demand side is starting to kick in a little bit. Prices go up. Demand is starting to come down. Not a lot, but it's starting to come down. As time goes by, there will be more substitutions into cheaper forms of power. And you're going to see demand for crude go down as a result. And big oil is telling us crude's going up. Look at that, a new high. This is like the Exxons, Chevrons, Shells, you name it. These are the big oils, the ones that Elizabeth Warren wants to tax, and thinking that somehow this is going to get more into production. So you tax them, and then you expect them to produce more. Where did she go to college? Where did she go to school? Did she ever read an economics book? Price controls don't work. Windfall profits taxes don't work. Where were you in the 70s, Pocahontas? Where were you? I was here, I was alive, and you're older than me. That's for damn sure. And I can't say that about too many people because I'm as old as the hills. All right? Old as the hills. All right, gasoline everybody complains about, surging to new highs. Of course, Governor Gruesome of California has to put on more tax, even though he brags about his budget surplus. He still wants to tax gas just for the hell of it. Because there's one thing they love, it's to tax. And then he'll give you a rebate with the other hand. So, out of one hand, take the tax. Out of the other hand, give the rebate. How dumb. Do these guys ever read an economics book? Have they ever watched the show? I think they should watch the show. Maybe they'd learn something.
Yes! Yes!
Natural gas. Again, this is another one that's zigzagging back and forth. Right now, it's in an ascending wedge that's extreme, shooting straight up and at really historic highs. So natural gas is going to be a problem in Europe. The pipelines shut off. There's all sorts of indications that they're going to continue to embargo everything, and no gas will go through the pipelines to Europe. You know, it's a big sacrifice for them. I don't know why they're doing it, to be honest, but they are actually having an impact because Russia right now is having problems, and they have some debt due in the not distant future. They may default. That'll be interesting if that happens. I don't know yet. We'll see. Okay, Invesco base metals. These are, the zincs, the leads, the coppers, and all that. And this one's broken down. This looks like a recession type of picture where it broke through the uptrend, snapped back to it, curling over, and it looks like it's going to go down. Copper miners ETF. Dr. Copper is in a massive bear flag. Okay, bear flag, Dr. Copper, struggling between lower demand and higher price, and more inflation, and it's more difficult to get the copper out of the earth, and it costs more too, and it costs more to transport it, and it costs more for the copper that goes into the copper. Oh my God! All right. So cotton is the nation's fabric. It's in my jeans, it's in my cool shirt, it's everywhere. Cotton, and it's still in an uptrend. Okay, so your clothes are going to cost more, so just don't wear any. That's the secret. That's the secret to this. Just don't wear any clothes. Don't buy any clothes. Just walk around naked, and then you won't have a problem with cotton prices going up. Right? Perfect. Okay. Lumber, kind of lumbering along here. This is another one that has just gone skyrocketing up, skyrocketing back down. I mean, a move from like 200 to 1700 back to 200. Oh my God, that makes me dizzy. But right now it's on the lower end of the line, and because housing is really experiencing some problems, lumber is feeling the hit right here, right now. There's very little demand because all of a sudden housing is unaffordable, very unaffordable. Interest rates up, cost to build up, permits up, government involved up, vote out the incumbents, yes, make America laugh again, yes. Please throw the bums out, and we'll throw a party when we throw the bums out. Woo! All right. Okay. Silver, and this one, high-O silver, it is not away. This is not a good sign. This is one of the little clues that we are really going to have, and we're going to get hammered in the economy. Silver should be rallying here. If one commodity should be going up, it should be gold and silver, and they're having problems. That tells me that there's some whiff of deflation in the wind. A whiff of deflation. A whiff of depression in the wind. Not now, but it's maybe coming down the pike. We'll have to keep an eye out on this. I always loved silver. I'm a perma bull on gold and silver. And every time I say bye, Lucy pulls the rug out from the football, and I flat on my back like Charlie Brown. And gold, also another avoid. It's right there on its trend line. It's not looking too glittery as gold. And this is, again, a really bad sign. If one sign is the worst sign I've seen here, it's gold and silver. The fact that they are not rallying with this is troubling. Very troubling. We're going to see what happens. but this is making me nervous. Like, that nervous, you know? Okay. Oh my God, you know, I think I've been drinking too much coffee in the morning. I think the doctor said I drink too much coffee, get too excited. Who, me? It makes my Tourette's go. Oh, sorry. All right, here we go. Okay, this is the gold and silver miners. They're also, just had a tiny little bounce on the trend line. If they break below that red line, it is kaput for gold. I mean, did I say kaput for gold? That's it. You can put a fork in it. The fat lady can sing. Not as well as me, of course, but she can sing. So it's pretty much over for gold if this happens for a little while. It'll take a long time to work that off. Okay, now this is why the Dow has acted so well. Big Pharma. The Dow Jones Industrial Average has 4 healthcare stocks in it. 4 big healthcare stocks in it. They include Merck, Johnson & Johnson, Amgen, and United Healthcare. And we're going to show you those in a minute. And this is the only sector other than oil that is still making new highs. Why would that be? I don't know, but we'll see. This is Amgen. 5 years. Amgen is right against its highs. It's been in a 5-year bull market and rally. This is also a major player in the Dow, $250 stock, and this is at a new high. Anthem, Blue Cross, this is not in the Dow, but it's still one of the managed healthcare companies. And again, close to its highs, continues to rally. It's not going down with the rest of the market, but maybe about to. These stocks may have just crested, and we may see a big plunge in Big Pharma. We'll see, but it's not looking good. For one thing, BristolMyers. Notice it broke down a little bit from its triangle there up on the upper right. This could be a sell here. The drug companies could be sells. They have become exhausted. Okay, they've traded up from all these jabs and all these medications, and I think that their time is done. I think they're the one that they're going to need a vaccine because they're about to plunge. Humana Hospital Management. What better time to be in the hospital management business than when everybody has to go to the hospital for a flu? So they've done pretty well themselves. Hospital management, another part of healthcare that's growing. Merck, part of the Dow, big drug company. Wow, look at that. You know, and a bear flag if I ever saw one, and a long one. When this thing goes, it's going to go. Pfizer, the Jabmeister. Right here, look at that. Perfect triangle. Maybe this time it doesn't break up. Maybe it breaks down. These stocks are due to decline with the rest of the market. They have been held up artificially because of the sickness that's in the air, I guess. Achoo! Anyway, Pfizer, not looking so good. I mean, it's actually probably going to break down. It's a decent pattern, but I look for it to break down. And Regeneron is a biotech company, also a bearish ascending wedge. They make a lot of the drugs and chemicals and all that go into a lot of the vaccines and other drugs and pharmaceuticals. And finally, United Healthcare Group. There's a $500 billion market cap, and it's also a $500 stock. So this is the most expensive stock that there is in the Dow Jones Industrial Average. It has the most impact. So when you add that to Amgen, Johnson & Johnson, and Merck, you get a lot of impact on the Dow, and that's why the Dow hasn't gone down very much. And now Apple, we'll go to the big boys here, and Apple's broken down, nothing new here. Amazon, still in a downtrend, and Meta Platforms, we got to talk about this. Skid Mark Zuckerberg, my favorite CEO in the history of the world. Okay, this is the scam meister of the world. Whether it's Insta-Scam, whether it's What's Crap, or whether it's Disgrace Book, Zuckerberg is there. Skid Mark Zuckerberg, as he's known. And you know, I'll tell you this. He has manipulated every one of these platforms to hold out the welcome mat for scammers. He just lost a suit. And he's going to lose one personally, too, by the way. A suit for breach of data that cost him $400 million. But he's also on the hook personally. That was just the company settlement, not his. So, Skid Mark, you're going to be skidding off into history pretty damn soon. Let's all hope. Let's all pray. All right. Alphabet, Google came down a little bit above its target, but it may go through it. We'll see. Had decent earnings, but multiples are getting lower, and that's just basically it. And Microsoft, target of about 180, 190. It's one of the companies that's going to bleed a lot of market cap, so the averages can come down. Right now, these stupid stocks have pretty much had it. They're kaput. They're flat on their back on the highway. But, the big cap boys, they still got a lot to bleed out. And this is one of them right here. This could lose 500 billion or more, okay, by itself. So could Apple, so could Amazon, so could Alphabet. They could all lose that much or more. Nvidia, your favorite chip company, it makes crypto chips for crypto miners who use up a ton of electricity and think that it's green, and they basically are killing the grid in every damn state because mining uses up electricity like crazy. And, between that and EVs, we're not going to have any power forever. So, be careful what you wish for. You might get it. That's the future for you. No electricity. And Qualcomm is a 5G semiconductor company. Also, Qualcomm Stadium is named after Qualcomm, in case you didn't know. I'll bet you knew that. Didn't you? Okay. Well, anyway. And its target is real low, too. This company has pretty good market cap here, a real good niche in 5G, but it's definitely coming down, and when it goes through that horizontal line, you can watch it fall all the way down to probably around $100. All right, the bank index, still not looking healthy. Bear flag, nothing much more to say about it. Banks are having trouble right now with the yield curve flat. They can't make a lot of money. And the broker-dealer index kind of looks the same, except one thing that they're just slobbering for. It's the SpaceX IPO. If they can just hold the market up just a little longer, they're going to try to shove that $127 billion IPO down our throats. Okay, $127 billion for a company that's going to go to Mars next year? Yeah, I think so. And the guy, never mind, I'm not even going to talk about it anymore. I'm not going to talk about it. All right. So this is the Dow Jones REIT index, so we can get a look at real estate, and it looks a little toppy here. Now, I don't know if we're in a bubble or not in real estate, but this definitely looks like probably we've seen a little peak here. And the prices of real estate are going to go down simply because it's unaffordable, or interest rates are going to go down, or something has to go down because right now houses are not being sold. And the home builders ETF, this encapsulates it all. Housing is unaffordable. It's about to go off a cliff. No one can afford to buy a new place with the interest rates going up, and the prices of the houses going up, and there's just another big squeeze until everything settles in and of itself. And finally, I want to give a big shout out to Dave Inc. As you may recall, Wells Fargo basically stole $7,000 from me, and the charges were from Dave Inc. Well, I actually emailed Mark Rubik's Cuban, and Mark was gracious enough to refer my my concern to somebody at Dave Inc. I didn't think they were going to do anything. To be honest, I thought they were just going to give me lip service. They came through. I got a letter. They admitted responsibility. They admitted accountability, and that leaves Wells, you smell. And that's why Wells was behind me, because Wells is the most corrupt and crappy bank there is, and I'm coming for you, Wells, right now, right here. Get ready. You're going to lose your butts, all right? And with that, I want to say thank you for tuning in, and the subscribers are coming in like crazy. Please tune in. We'll see you next time. We'll have more great stuff for you. Bye.